Good morning, everyone, and welcome to Trading Binary Options using Volume Analysis. Before we get started this morning, I would like everyone to take a moment to read over the Nadex risk disclaimer, and it is for your protection as well as ours. Basically, if you are trading, there is always risk involved, even with limited risk provided by the binary options. Now, for those of you that do not know me, my name is Gail Mercer. I have over 15 years of trading experience. I started out with a company that programmed indicators and simply fell in love with price bars. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities, Traders World, and Top Shelf Magazine. I've also been a speaker at Traders Expo, Traders World, Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options Using Currencies and Trading Nadex Binary Options Keeping It Simple Strategies, as well as the New Trader's Guide to Trading Nadex Binary Options and Spreads. Now, for those of you that do not understand what volume is, it's actually a measurement of the total contracts bought or sold. It can be referred to as buyers versus sellers, bears versus bulls. Now, because forex does not have a central exchange, we can't see the actual contracts. Instead, we use tick count as a substitution for volume. Now, one tick count is considered to be one increment in price, okay? Now, there are different ways to measure volume. And a little bit later on this morning, I'm going to show you multiple ways to measure that volume, okay? First, you have a standard volume indicator, and really that just shows you the total volume. It doesn't break it down into buyers versus sellers. Most of them are coded. If the volume bars are red, that simply means that the close was less than the open, or sellers controlled the bar. If it is green, that means that the close was greater than the open. So in other words, if you're using a candlestick and you have a bullish candlestick, that simply means buyers controlled it. If the candle is red or bearish, then the sellers controlled it. Now, some volume indicators do have an average built into it, and they'll cover it based on the average, okay? Cumulative delta actually provides a behind-the-scenes look into the price bar. So you can actually see whether the price bar was controlled by buyers or sellers. Now, to me, this is very important because it shows the hidden intention behind the bar, whether it was buyers or sellers. There's also what is called as volume profiling. That also shows the buyers and sellers on top of the price bar, and you can actually see the total volume per bar and whether it was more buying or more selling. Also shows what is considered the price point control. In other words, at what point did buyers take control or sellers take control? And I developed the directional volume indicator because it follows the path of the cumulative delta in what I believe might be a simpler to read format, okay? And we're going to look at all of these this morning. Now, this is what is considered as a volume profile bar. In other words, the volume is plotted horizontally across the price bar. Your point of control in this example is this red line here. In other words, this is where they're saying that like the war in prices going on, okay? And you can see that you have the volume bars are plotted across the price bar. To me, this is complicated to read, which is one reason I personally do not use this one. Now, the next one In this case, we're going to look at all three. We're going to look at the cumulative delta. And cumulative delta is a very unique charting option that only a few platforms offer, with multi-charts being one of those platforms. Now, you may think this is price, and it's not. It's actual volume, okay? So if you know how to read candlesticks, you actually know how to read the cumulative delta chart, okay? In other words, this was dominated by sellers, but they were very weak because this is half of a pivot formation, okay? And then bulls step in, they close above the high of that bar, which tells you more than likely the next bar is going to be up, okay? If we were reading price, this is exactly the way we would read that, okay? In this case, it means exactly the same thing. The bulls have stepped into the market and they stepped in very strong, okay? In this case, this is the directional volume indicator, okay? And you can see they put a lot of volume into this bar right here, because anything above this line is sellers, okay? Anything above this line is buyers. So you can actually see there was a lot of buy-in and a lot of selling on that one bar, okay? Now, I also coded in price action to the actual volume indicator. So in other words, it makes it easy for me to look at my volume and tell you, okay, this was a high, okay, this was a high, this was a low, this was a high. Highs continued up until here when price made a low. Why? Because it's a red bar. If we have a gray bar, that tells me it's an inside bar, okay? And if we have a magenta bar, that simply tells me it is an outside bar. So this bar made both a high and a low. This one did not exceed the high or the low. This one made a low, this one made a high, followed by a series of lows with buyers coming in here because this little delta is above the zero line, okay? And down at the very bottom, you have just a standard volume indicator. Now, this does show you what is considered the total volume, okay? So, for example, let's take the last one here. That was 934 contracts traded, okay? In this case, we're using ticks because we can't actually measure the contracts. But out of those 934 ticks, how many were buyers? How many were sellers? We don't know. This does not give you a picture behind the scenes. This one does, and this one does, and so does volume profile. Any questions on what you're seeing now between these? Okay, if there's no questions, we're going to get even more complicated. And this is considered a more advanced technique. I'm going to take it easy on you today, though, okay? Now, when you're reading volume, okay, you're looking for unusual patterns on highs and lows. You might see the sellers abandoning a move. You might see buyers taking control. You might see divergences. You'll have a lot of divergences with cumulative delta in the directional volume, okay? And again, I have built in the price action because I wanted to see the price action within the volume bar, okay? In other words, I could take price completely off my chart and still tell you what happened just by reading my volume indicator, okay? Now, again, remember, the delta will measure the who controlled the bar at the end, and that is very important to understand. Now, if you're using candlesticks, the only thing that you can say is if the close is greater than the open, it is a bullish candle. If the close is less than the open, it is a bearish candlestick, okay? That's about as much information as you're going to get off of candlesticks. Now, will candlesticks work? Well, sometimes they will and sometimes they will not, okay? For example, if you look at this one, okay? Now, I already know this made a low because this is a red bar, okay? This is a green buying volume, okay? And that equates to this price bar right here, okay? So you're thinking, okay, this is a bearish bar when actually it was a bullish bar, okay? Would it have made a difference? Probably not, okay? But you will see some that will make a difference, and I'll show them this morning, okay? Now, when I said look for unusual patterns, I'm always constantly looking at the highs and the lows that have previously been made on price, okay? Because I'm a support and resistance trader. And every high creates a potential area of resistance. Every low creates a potential support area, okay? So in this case, when you look at this high, and this comes back to it, but you look at the cumulative delta, do you see how this is going in one direction? It's going higher, but this one is going lower. That is called divergence, okay? You can also see it because if you look at the directional volume indicator, notice that the delta is below zero. That means that as these highs were made, sellers stepped into the market, okay? Anybody have any questions about that? So there's two different ways to see it. You'll see it because the cumulative delta is making lower highs, but price is making higher highs. So you have a higher high with a lower high down here, and that is equal to trend divergence, okay? Or you can just see it in the directional volume as sellers are stepping in, okay? When you're looking at the lows, okay, here you're making lower lows, here you're making higher lows. Again, notice that at the end of the bar, this red bar that made the low, sellers lost control. In other words, buyers stepped in when this low was made, okay? And because buyers stepped in, more than likely it will go up, okay? This is unusual patterns that you will see when you're looking at volume. Now, here is another one, and this one would actually be considered a bull trap, okay? And what happens if you extend this line all the way across, and I'm a little bit off there, then you can see this is the first weak bar that forms the top. And look down, it's this actual, the red bar, okay? Do you see what's going on? They're selling the high, okay? In other words, as this high was made, they're selling it. Well, you might think, well, I can see that from the volume bar because it's a doji, and you would be correct. You could. But look at the directional volume indicator. It's telling you that sellers stepped in, not on this bar, but the previous bar. This is where they actually started stepping in, and they continued on to the next one. That tells me immediately this is an area I want to watch. Now, do you see how they come back and they test this area? There's a test here, and there is another test here, followed by another test over here, okay? Look at what the cumulative delta was doing during that time. This is, has anybody in this room ever heard they're selling the highs, okay? This is what is meant by, oh, they're selling the highs. In other words, for most of you, have you ever went long only to be stopped out? Because the next bar immediately goes against you. I can't even count the number of times that has happened to me. Well, this is what stops it, okay? The cumulative delta, you can actually see they're selling the high. Do not buy a high that they are selling, okay? That is a big no-no, and this is very evident, okay? So what happens, okay? The moment that you go in, a bearish candlestick will form, okay? They'll go down, they'll take out the previous low normally, okay? And then they will come back and they will make a lower high, okay? When they make the lower high, that's where you want to consider entering, okay? This is your entry point, okay? If you're really good and you want to use an out of the money option, you could do it right over here. Does everybody understand this pattern? Okay, then I'm going to complicate it a little bit more. Now we're going to look at hidden divergence. Do you see how, remember, you're looking at the volume above the zero line. Look at this volume, okay? Do you see how it went higher over here? You had really high volume over here. Well, what happened? They didn't make a higher high. So you had a lower high with higher high in the volume. And what does that equal? Hidden divergence. And what happens after hidden divergence? The market goes down. In this case, because it was on the highs. Any questions? Okay. Now, volume can be a leading indicator, okay? And the reason I said it can be is because if you're using cumulative delta or if you're using the directional volume indicator, then you're looking at it bar by bar, okay? There's no lag in there, okay? You do want to read it at areas of support, areas of resistance, overbought, oversold areas, and combine that with the power of divergence, okay? Now, before we go and look at some charts, I just want to give you my website, which is tradershelpdesk.com or gm@tradershelpdesk.com. Okay. Now, I'm going to bring over some of the charts. Okay. And show them to you. I have to fit them on my screen here. Okay, so here I've got 3 charts, okay, and multi-charts does all 3, okay, so whichever method you prefer, multi-charts can handle it, okay, they have an excellent platform for volume, okay, so the first one is your standard volume indicator, okay, and all this is doing is if you have a bullish candlestick, then it's plotting a blue volume bar. Okay, if you have a bearish candlestick like this one right here, it's going to be a red volume bar. Okay, and if the close is equal to the high, close is equal to the open, then it'll be white or gray or some other color. Okay, the line in here is just a 15-period moving average of the volume. Okay, so I never could understand volume when I looked at it this way, because, you know, it doesn't tell me really what went on behind the scenes. Okay. Now, some people might be able to trade that. I'm not one of those people. To me, I didn't have enough information. Okay. And that's what I'm looking for, is more information. Okay. Now, this one is actually giving you the volume profile. The horizontal lines represent the volume at each of these levels, okay? So this one to me is complicated in a little bit more than what I need to do. I have to do a lot more analysis on this versus the cumulative delta, which is why I like the cumulative delta more. Okay. Now, in the cumulative delta, remember in the other one, I went through a bull trap. Well, this is a bear trap that I wrote about this morning on the Nadex site, Market News, I believe it was. So here you make a low, okay? Now, I know when it makes this low, something's up because buying started coming in. Do y'all see that? So that's kind of when I put on my thinking cap and said, something going on because they're buying that low. Does everybody understand that? Do you see it visually? Okay. To me, that is a very, very visual representation. Something going wrong here. Because what are they doing? Well, they're buying that low. Well, would you expect them to buy that low? I mean, if price is going down, wouldn't you expect them to be selling it to make it go down? Now, I'm going to increase this a little bit because you're going to need to see this. So you have them and they're starting to buy. Okay. That is your first indication. Hey, wait a minute. Something is wrong here. Now, you might look at this one and say, well, they started buying over there. I see it right there. That's profit taking. Okay. How do I know that is profit taking? Because sellers immediately return to the market and push the market down. Okay. And that's what profit taking is. Okay. They take some profit, but then it goes down again. Okay. That's the way it, in my mind, this is the way it should work. Okay. Now, look at this. Look at all the buying that occurred during this phase right here. So they move it up and then they come back and then they move it up again. But look at all the buying volume. Do y'all see that? Now, I just want to make sure everyone knows that we are not giving out trade recommendations. This is for educational purposes only. Okay? Do y'all see how they were buying there? And then what happens? Okay? Well, sellers step back in right here. Do y'all see that? And that was a lot of selling going on there. They didn't get very far. Now, the one really critical aspect when you're waiting on a bear trap is you're not entering until it comes back to test the low where all of the buying started. What was the low that I said the buying started? Right here. That's the low. This is where they started to buy the market. Okay? And they continue to buy in between all of this. Do y'all see that? Now, what happens in the cumulative delta? Here's your low in the cumulative delta. They come back to test the low that they made over here. They came back to test the lows over here. Do y'all see that? This is where they step in, the buyers, they step in and you have made a trend divergence pattern in the volume now. Then what happens? You make an even stronger trend divergence. Because look, they came right back to test it. Do y'all see that? They came right back. And you're thinking, oh yeah, now it's going to go short. Wrong. It goes up. Because they were setting you up from get-go. If you're looking at the directional, buying, 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 buying. Do you see this huge volume bar? I mean, it exceeded the volume bar over here. But they didn't get lower. Why? because they were buying it behind the scenes. They were buying it. Do y'all see that now? It's very visual to me. And remember, these are candlesticks, just like a price bar candlestick. And again, when they came back, do you see they came back to test this low over here? They bought it. They bought it. Why are they buying the low? Because they want to take price higher. They don't sell the low because they want to take price higher. They buy the low because they want to take price higher. Does everybody understand? Any questions? Thank you, Jack. I thought this was going to be a complex subject, but evidently y'all were doing really good at understanding. And it did take me a while to get cumulative delta. Sometimes I would go cross-eyed. Sometimes I have to have a bottle of ibuprofen on my desk because you're studying what's going on behind the scenes. You're studying almost like the statistics of what's going to make this market go up. Yes, it was recorded. And I did a video on my blog this morning, Jack, that actually showed this playing out and how you can potentially trade out of the money binaries using these techniques. And these, you know, they can be very low risk entries if you're trading binary options, which is why I love them, because everybody knows I love out of the money binary options. You know, and even this chart, if you look at this chart, you know, look, you're going up in price. Guess what? It was going down. And this is what I wrote about yesterday. It was a pattern very similar to this on the euro dollar. And this is where, you know, you can actually look to see, you know, what's going on behind the scenes right before a market report. Is this indicator already on Nadex charts? No. It would not be on Nadex charts, Carlos. You do need another trading platform for it. You know, something like multi-charts. Multi-charts is like the cream of the crop for doing cumulative delta. It's well worth the money you spend on it. And so you can get forex data through IQ Feed for $30 a month, which is, you know, not bad at all. And it will take you a while to learn to read these patterns. It will, because it's almost like, hey, wait a minute, I shouldn't be seeing this. You know, I can't tell you the number of times I've just kind of like, what is going on here? They're buying it, you know. It takes you a while to wrap your head around that. And the fact that you can see it will take you even longer. Any other questions? And I mean, one of the biggest things that you can actually look at the chart and say, wait a minute, there's a lot of buying going on in here, and this is going lower. That shouldn't be happening, guys. So you need to put your little thinking cap on and start analyzing when that goes on. And you can see it in the directional volume indicator. All of these are above zero. If they're above zero, you need to start paying attention, because they're setting up for a move. Any other questions? I do appreciate all of you joining me this morning. If you do have any questions, I suggest that you email me at gm@tradershelpdesk.com. And again, I do appreciate you joining me this morning. I hope everyone has a wonderful day. Well, thank you, and y'all have a wonderful day.